Imagine this. You're watching a stock, crypto, or Forex chart. Price keeps moving up, then suddenly stops at the exact same level where it stopped last week. It falls back down. Later, it rises again, and once more, at that same level, price refuses to go higher. Is it magic? Is it coincidence? Or is there a science behind it? The answer is support and resistance, the invisible lines on every chart that professional traders use to predict where price is most likely to pause, bounce, or break. In today's Deep Masterclass, we're going to explore support and resistance in detail. Not only will you understand what they are, but by the end of this session, you'll be able to draw them accurately, trade them with confidence, and avoid common traps. What are support and resistance? Support is a price level where buyers step in strongly enough to prevent the price from falling further. Think of it as the floor in a building. Resistance is a price level where sellers step in strongly enough to prevent price from rising further. Think of it as the ceiling. For example, if Bitcoin falls to $30,000 several times and then bounces back, we can say that $30,000 is acting as support. On the other hand, if it rises to $40,000 multiple times but fails to break higher, $40,000 is resistance. Now here's something very important. Support and resistance are not exact price points. They're zones. Why? Because markets are run by people, and people are emotional. Buyers and sellers place their orders in ranges, not at a single exact number. That's why we often see candles with wicks. Price moves into the zone, tests it, and then reacts. So remember this golden rule. Treat support and resistance as areas, not lines. Why support and resistance work? Now you may ask, why do these zones even work? Why does price bounce from the same level again and again? The answer lies in market psychology and order flow. Memory of traders. When traders see price bouncing at a certain level, they remember it. Next time price comes close, they act. Buyers buy again at support. Sellers sell again at resistance. Supply and demand. Support is where demand is greater than supply. Resistance is where supply is greater than demand. Stop orders. Many traders place stop losses near these levels. Institutions know this. Sometimes they push price into these zones to trigger stop losses before reversing the market. Round numbers. Humans love simple numbers. $10, $50, $100, $1,000. These psychological levels often become strong S&R zones. So support and resistance work because of human behavior plus institutional trading tactics. That's why every professional trader respects them. How to identify support and resistance. Now let's talk about how to actually draw support and resistance on your charts. There are several methods, and I'll walk you through each step by step. 1. Historical swing highs and lows. Look at past price action. Where did price previously turn around? If price made a sharp low at $25,000 and bounced, mark that as support. If price made a sharp high at $35,000 and fell, mark that as resistance. 2. Multiple touch points. The more times price tests a level, the stronger it becomes. For example, if ETH bounced from $2,000 3 times in 2 weeks, that's a powerful support. 3. Psychological round numbers. As I mentioned, $100, $1,000, $10,000 often act as magnets. 4. Trend lines as dynamic S and R connect higher lows in an uptrend. That line acts as support. Connect lower highs in a downtrend. That line acts as resistance. 5. Moving averages as dynamic S and R. The 50-day, 100-day, and 200-day moving averages often act as support or resistance. Institutions watch them closely. 6. Fibonacci levels. The 38.2%, 50%, and 61.8% retracement levels often align with S&R. 7. Volume profile and pivots. Where large volumes traded in the past, those price levels often act as future S&R. How price behaves at S&R. Identifying zones is only half the battle. The real question is, what does price do when it reaches support or resistance? 1. Bounce rejection. Price touches the zone and reverses. Candlestick signals. Pin bar, engulfing candle, doji. 2. Breakout price doesn't stop. It breaks through the level. This usually happens with strong volume and momentum. 3. Retest. After a breakout, price often comes back to test the broken level. Old resistance becomes new support. Old support becomes new resistance. 4. False breakout. Price breaks a level temporarily, traps traders, and then reverses. Institutions often use this to grab liquidity, trading with support and resistance. Now let's get practical. How do we trade using these zones? Strategy 1. Range trading. If price is bouncing between support and resistance, buy near support and sell near resistance. Use oscillators like RSI to confirm. Strategy 2. Breakout trading. Wait for price to close above resistance or below support with strong volume. Enter in the direction of the breakout. Strategy 3. Retest trading safer method. Wait for breakout, then wait for price to retest the level. Enter on confirmation. Strategy 4. Fade the false breakout. If you see a fake breakout with low volume and immediate reversal, trade back into the range. Risk management tips. Always use stop loss beyond the zone. Risk only 1 to 2% of your account per trade. Aim for risk to reward ratio of at least 1 to 2. Example trade. Buy Bitcoin at $30,500 on breakout retest. Stop at $29,800. Target $33,000. Common mistakes: drawing too many levels. Keep it simple. Treating S and R as exact numbers, not zones. Ignoring higher time frames. Daily weekly zones are stronger than 5-minute charts. Over-leveraging at breakouts, not waiting for confirmation. Support equals floor where buyers step in. Resistance equals ceiling where sellers step in. These levels form because of psychology, supply and demand, and institutional activity. Always draw them as zones, not exact lines. Use swing highs, lows, trend lines, moving averages, Fibonacci, and volume to find strong levels. Price can bounce, break, retest, or fake out at these zones. Trade ranges, breakouts, retests, and false breakouts with strict risk management. If you practice this every day, you'll start seeing charts differently. Now, if you found this helpful, hit the like button, subscribe, and share this with someone who's learning trading.